Hey guys, welcome back. So in today's video, I'm going to share 3 important tips on how to have good risk management when trading with prop firms so you can fail less challenges and get more payouts. So I've personally failed and passed a bunch of different challenges and received payouts from various different prop firms, including 17 payouts from FTMO alone. I've made my fair share of mistakes, but along the way, I've learned crucial lessons about trading with prop firms and managing risk. And trading with prop firms is quite different from trading your own personal capital. So the first tip is don't risk too much, but at the same time, don't risk too little either. So prop firms don't really like it when you risk too much. So for example, if you're risking 4% or 5% per trade, the prop firm may send you a warning, they may deny your payouts or reduce your leverage. So while most prop firms don't explicitly say on their website you can't risk more than 4% per trade, when you get to a payout, they'll review your account and they will penalize you for taking excessive risk. On the flip side, if you're risking too little, so for example 0.2% per trade, this can lead to what I call death by 1,000 cuts. So being too conservative can drag out the challenge for months and leave you demotivated. I once followed advice from social media saying that good risk managers only risk 0.3% per trade, thinking it would help me recover from drawdowns. But in reality, it took me 4 months to recover from that drawdown, and in the end, I still didn't pass the challenge. So for example, let's say you want to achieve 5% in profit for your payout. So that means that you have to pass a phase 1 for 10%, another phase 2 for 5%. So that means in total you have to achieve 20% in profit. So let's say you take 3 trades per week and you have a 1-to-2 risk to reward ratio and a 50% win rate. So assuming you're a profitable trader and you risk 0.2% per trade, it would take over 14 months to achieve that 20% profit target. So you might be thinking, okay, I don't want to risk too much, but I also don't want to risk too little. So what is a nice sweet spot? So a good sweet spot I found is around 1% per trade. This allows you to grow your account steadily while staying under the radar from prop firm scrutiny. So furthermore, risking 1% per day is a sound strategy because it helps you avoid hitting your daily loss limit. Risking only 1% per day is a good approach because it helps you to accommodate for potential slippages, weekend gaps, news releases, and spread fluctuations that could lead to exceeding your maximum daily loss of 5%. So the second tip that I have is to understand the prop firm rules. So one of the big reasons why traders fail is because they don't clearly understand all of the rules before taking the challenge, or they've read all the rules, but then halfway through the challenge, they completely forget about them. So for example, I know a lot of traders fail the challenges because they hit the max daily loss rule, and I've certainly done it before in the past as well. So you need to make sure that you track all your trades carefully, you write down all the rules. If your limit is 5% per day, ensure that you're not exceeding it across 2 or more trades in a day. Monitor your trades using the firm's dashboard or your own tracking system, and always stop trading before you reach that daily loss limit. So another point to consider is that each prop firm will have their own set of rules regarding consistency, gambling practices, and trading behavior. It's crucial to carefully review all their guidelines, and if you have any questions, make sure to use their live chat for help. So another tip that I have to help you manage your risks throughout the challenge is to use tools like equity protectors. So these are known as expert advisors or EAs. They're basically tools that help you to close your trades automatically once you hit a certain loss limit. So you can set them to close your trades if you hit a 3% daily loss or a 9% overall loss, which helps you to avoid exceeding the prop firm's risk rule. So the equity protectors are also pretty useful if you're managing multiple challenges or if you tend to forget your daily loss limit during a busy trading session. So in the past, I've built my own equity protectors, but you can find these tools online, some for free on platforms like MetaTrader 5 Marketplace. So if you're still watching, you'll probably like this other video that I made on trading psychology and 3 lessons that helped me get my FTMO payout. So if you found this video helpful, don't forget to like and subscribe, and I'll see you in the next one.